Good morning, everyone, and thank you very much for joining me today. Today is Tuesday, it's the 21st of November. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Can I just double check that you guys can hear me? Can you guys hear me okay? Okay, excellent. Hey, Kim, good morning to Anna, Raj. Pleasure to have you on the webinar. Thank you for joining, David. All right, I'm just going to bring up our high-risk investment warning. I apologize for yesterday. Yesterday, I ran a Microsoft update, and it just took forever to actually update. And by the time it finished, it passed our time for the webinar. So I apologize for that. I'm just going to keep this high-risk investment warning on for a few more moments. All right, let's just bring up the market commentaries disclaimer. I'll keep this on screen again for a few moments. And our reference is MarketScope 2.0 and TradingView.com. All right, I'm using two screens, so if I'm not looking directly at the camera, I'm just looking at the other screen. But I'll try my best just to keep my eye focused on the camera. Hey, James, good morning to you. All right, let's just go ahead and bring up the real rate. Let's bring up the real rate. This is interesting. We're looking at the real rate on a day. The last time you and I spoke, we talked about a head and shoulders top on the real rate. In other words, it looks to me as if the real rate may be topping out. The head and shoulders pattern falls into a category of patterns called reversal patterns. What you can see here is it's got a downwards bias to it, a downward slant, and the way we can see that is with the way the neckline is slanting downwards. What's happened is we have broken below this horizontal dashed black line, not by much, but it is below. Okay, it is below. So what we can do is let's just take out the head and shoulders label. So you can see we've got a peak. Got a peak. And we can put a trough here. We can put the low peak over here. And if we've got a lower peak there, we've got a lower trough here. Okay, and that's notwithstanding sort of the price action over here, which also has a lower peak, followed by lower trough. So I'm quite satisfied that the trough, lower peak, lower trough keeps to the spirit of the head and shoulders top. I think that's the idea here. So what happens when you've got the downsloping head and shoulders pattern? You actually go into downtrend before the pattern's completed. So we do have this downtrend on the real rate. We're still waiting for the pattern to complete, and the way it completes, got to break through the neckline. So we do have downtrend on the real rate. I think the next step is for us to see if the head and shoulder top completes. Let's just put back the labels of head and right shoulder. And you can see this arrow here. This was the big sort of change up. This was when the inflation numbers came out last week. It really pushed the real rate downwards. And what we can do is we can keep an eye on the RSI. That RSI is, of course, below 50. I just want to make it a bit clearer here. Yeah, so it's below 50, and as long as it maintains below 50, there's that underlying bearish momentum. Well, that should take us to the pattern completion if we stay below the 50. So if we stay below the, we'll see the head and shoulders complete. So what's the big deal? This topping pattern. Well, it's been a key driver of markets. The real rate's been a key driver of markets. It's been supporting the US dollar, and it's been a headwind against stock markets. So what we can do is we can add in the US dollar underneath this. So let's just do that. Okay, so this is this dollar, and let's put in our peaks and troughs. Okay, peak, trough. Okay, lower peak, lower trough. Okay, so we've got the downtrend. Now, what's interesting is this part here, how this part's played out, because we did speak about this. Okay, we did speak about this. We spoke previously, and I'm just going to go ahead and bring up market scope now. So let's bring up market scope. Let's go through to the daily US dollar here. Here's that lower peak, lower trough, peak, trough, lower peak, lower trough. And then the last line study we drew in was this guy. Okay. So we drew this in, and we said it's looking like some sort of rally in the downtrend. That one we got right. Okay, the last 3 days, the last 3 trading sessions, dollars got obliterated to the downside. Take a look at the RSI here. So the RSI is, again, it's below 50. So if we get some sort of rally over here, again, I would consider that in the form of the lower peak, lower trough pattern. That seems to be playing itself out. It does look as if there are headwinds now that are facing the US dollar. And that, again, I think is the way we have analyzed this over the last few weeks, few months. We've been looking specifically at the dollar and a potential topping in the US dollar. Why a potential topping in the dollar? It's because we've got that head and shoulders top in the real rate. And what we can do here is just go down to the, go up to the weekly chart. Let's just take a look at the weekly chart and do some analysis there. All right, so what we can see here, I think there's a few things to take note of. The first is that we've dropped below this 30-week moving average. And importantly, the 30-week moving average is starting to track downwards. Okay, so we must keep an eye on the slope of the moving average. And then, of course, take a look at the RSI. The RSI is dipped below 50. So we're starting to see this bearish momentum starting to come into the US dollar. The question is, why is it bearish momentum starting to come into the US dollar? Well, we don't have to look far. We can just go through to our real rate, and we can see his head and shoulders top is really dominating and is a key driver in the dollar. Now, what's interesting is, of course, if we, the big key here is, do we break the neckline or do we actually meander? Do we start going laterally there is a strong possibility that we can go sideways as well. Why? The question, why would we go? Because that would be, we at the peak of the interest rates, but it may take a long time for the Fed to actually start dropping rates. The market's expecting rates to be cut next year, okay? The Fed's talking against that. So we just got to see if we do break that neckline or not. That's going to have an effect on how lower US dollar goes. It's also going to affect the stock market. So take a look at this. Let's change US dollar here. Let's put the SPX. Let's put the SPX 500 in. Okay, and you can see as this head and shoulders has effectively unfolded, we're getting movement up here. We're getting nice movement up here in the S&P 500. Let's take a look at NASDAQ 100. Okay, we'll just use the FXCM CFD for that. Okay, you can see the directional bias here to the upside. All right, so you can see that this head and shoulders top, we've got to keep an eye on it. Does it complete? Okay, does it complete or does it move sideways? Okay, move sideways, then it's going to effectively put a cap on the risk side of the market. It'll put a floor on the dollar side of the market, on the haven side of the market. So that's very interesting for us. A couple of others that we've got to look at here. We've got to look at the Russell 2000, okay, because the small caps are going to play their part too. So let's just double click on NASDAQ 100. Let's bring up US 2000. So the Russell 2000. We're using the FXCM CFD here, and let's bring that up. Okay, now what have we got here? It's lagging. It's lagging the NASDAQ, and it's lagging the S&P 500. Nevertheless, let's put in our peaks and troughs. Okay, let's put in our peaks and troughs here, and I think we can get some sort of encouragement here with the peaks and troughs if we put in our reference peak over here. Sorry, our reference trough over here. I beg your pardon. Can you see where I'm going with this? Then here's our reference peak. Okay, well, if we've got a reference trough here and our reference peak over there, then you can see that we've got the higher trough here, and we've got the higher peak here. So the small companies index actually moving into uptrend as well. It's not quite as steep. It's not quite as steep. So there is still some sort of reluctance or some sort of resistance from a small company's point of view. Nevertheless, okay, we can put a trend line in here, and that trend line is tracking the, let's make this logarithmic, track the uptrend of the Russell 2000, and what we can see is we can see if it steepens up. Is it going to steepen up? In other words, what we're looking for to see if it steepens up, we'll be looking for the higher trough over here. I'm just going to say HT, okay? I don't have enough space, so HT over here. And if you get an HT over there, you get the HP over here. And if you get that, then it steepens up. Okay, then the small companies starting to show some sort of cooperation. Okay, I want to just stop there because there's a few other things I want to show you within why I think that we tending towards I can't say this for certain. I think that we're tending towards an end of year rally in the stock market. What we've seen is we've seen the real rates come down. We've seen the NASDAQ lift up. We've seen the S&P 500 lift up. Importantly, we're seeing the small companies index lift up. Are there any questions? Yeah, and I think the DAX, we'll take a look at the DAX in a moment, Raj, just to see if there's any similarities. I just want to stick on to the US side for just as the measurement tools. Any questions at the moment? I don't see anything coming in. Okay, so will the US dollar continue down? Kim's asking. I think that it's facing headwinds, Kim. Again, remember what I said. We're looking to see if this head and shoulder pattern completes. That's important. If it completes, then effectively, I think we do see further weakness in the US dollar, and I think we see further support for the risk markets. But if we move sideways, that changes the situation, changes the scenario. Then there is that, what we said price floor for the haven side, the dollar side, price ceiling for the risk side, stock side. So we just want to see how this unfolds. Okay, again, I can't predict. We're going to have to react to how this plays out. But again, I think there are elements to suggest that the risk side of the market continues upwards. If the risk side of the market continues upwards, then of course we'll see the dollar continuing downwards. What are the other signs? What are the other signs around that? So the other signs around that are as follows. Okay, let's take a look. Watch this. Okay, let's take a look. We've got here SPX 500. SPX 500. Okay, and the fact that we've got SPX 500, underneath that I'm going to put in what we call the equal weighted S&P 500. So the SPX 500, the S&P 500 is not equal weighted. There are different sized companies based on market capitalization. But what we can do is we can look at the equal weighted ETF underneath that. Okay, so let's bring that underneath. And what have we got here? Is very similar to the Russell 2000. Look here, let's put it in our peaks and troughs. So here's the reference trough. Here is the reference peak. Okay, here is the higher trough. I'll just make it HT. Here is the higher peak. So now we can see that, okay, now we can see that the equal weighted S&P 500 is also moving up. So we are getting what's called market breadth. So that's positive. Okay, so that's positive as we head into the end of the year. What's the next signal that we can potentially look at? The next signal we've seen before. So what we're going to do here is we're going to go NAS 100. Okay. I'll just use the FXCM NAS 100 divided by the FXCM SPX 500. Okay. So now we're looking at a relative chart. And what we're seeing that it's moving in this upwards direction. It's moving in this upwards direction. And you can see that when there is relative strength towards the NASDAQ 100, well, it tends to lead the risk market up. So we can put SPX 500 underneath. And you can see that by and large, when we get these upwards movements here, okay, you get upwards movements here, okay, when you get upwards movements here, you get upwards movements here, okay. So the fact that we've got this relative strength start to come out in the NASDAQ 100, let's take a look at it on a weekly basis. And I like the fact that this is starting to, let's just remove the drawing. Let's do this again. Let's remove the indicators. Okay, so what we've got here is a breakout. So here's the breakout. Okay, and what we have here is a breakout. Okay, here's a breakout. Okay, so it seems to me that the leadership that's coming through from the Nasdaq positive as we move into the holiday period, and if it maintains, I think it bodes well for the risk side of the market. And I think, Kim, then there probably would be pressure on the dollar market. Okay, things can change up, so we'll carry on monitoring, but it does look as if we are seeing some sort of positivity here on the risk side of the market. All right. Are there any questions? Any questions? Please go ahead and type this through. Let's just take a look at the DAX just to end off with. Okay, so you can see the DAX breaking above. It's moved above its 30-week moving average. 30-week moving average has turned up. Really strong week for the DAX last week. You can see that we are in zone 1. A little bit of froth coming in. A little bit of, let me try that again. A little bit of froth coming in. So what I would think is that the froth has to clear at some stage. So maybe some sort of pullback now. But guess what? I think that sets up the platform for the next leg up. So DAX also looking quite positive. All right. I don't see any questions coming in. So I think that we can conclude at this point. And what we will do is we will continue tomorrow. Tomorrow we'll also do the crypto minute. Thanks very much, guys. Have a great day ahead, and I shall speak with you tomorrow.